Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Emirates NBD announced today a net profit of 1.81 billion dirhams for the first half of the year, up 40% compared with 1.29 billion in H1 2012. According to a bank announcement, total income also increased to 5.55 billion dirhams, up 7% from H1 last year. Customer loans were at 231.8 billion dirhams, up 6% compared with 2012, while customer deposits were at 230.4 billion, up 8%. Emirates NBD's CEO Rick Pudner was quoted as saying that the growth momentum in their retail and Islamic franchises has evidently gained pace. And during the period, they also successfully completed the acquisition of BNP Paribas Egypt. And Dubai logistics firm Aramex also reported a 12% rise in second quarter net profits, boosted by growth in core Gulf and African markets. Aramex posted a second quarter net profit of 72.3 million dirhams, compared with 64.6 million in Q2 2012. Revenue for the quarter rose to 845 million dirhams, up 9% from the second quarter of 2012. Sanad Aero Solutions GmbH, Mubadala's aircraft engine and components financing and leasing solutions company, is extending its relationship with Abu Dhabi National Leasing, the lease financing arm of the National Bank of Abu Dhabi, with over $400 million US. This most recent transaction will support Etihad Airways' long-term spare components program. Sanad and ADNL have been working together since late 2011 in providing innovative spare engine and component leasing solutions to an expanding number of industry-leading airlines globally. And this is the fourth transaction made by the companies in order to support a growing number of airlines in collaboration with Mubadala's maintenance, repair and overall service providers, SR Technics and Abu Dhabi Aircraft Technologies. Master developer TDIC is inviting contractors to submit bids to build the roads around the new Louvre Museum in Abu Dhabi. According to a local daily, the company is asking contractors to bid for the building of the roads, utility services and infrastructure to service the individual plots within the 2.4 million square metre cultural district, as well as constructing a main access road to link the cultural district with the Sheikh Khalifa Expressway. The cultural district is also set to include a performing arts centre, a luxury shopping mall, boutique hotels, a canal and souk, and luxury homes. The Louvre is set to open its doors in 2015, followed by the Zayed National Museum in 2016 and the Guggenheim in 2017. The risk on sentiment was in full effect last week, with the US dollar posting its second straight week of losses. Driven once again by future Fed policy, markets took confidence from Chairman Ben Bernanke's most recent testimony to Congress that QE measures would continue at their current pace until the recovery shows moderate signs of stability. Markets have been driven by speculation surrounding expected future Fed policy, and the most recent testimony has seen US equity markets close the week at record all-time highs. Well, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Al Pari Middle East, for his view on the upcoming trends.
In what's been a relatively quiet start to the trading week, Perhaps the star performer has been the Japanese yen. Now, we've seen a lot of buying support propping up the yen to kickstart this trading week as a result of the disappointing election outcomes in the upper house in the recent Japanese elections. Now, what we saw is Shinzo Abe's LDP party wasn't able to secure a majority, and this has seen a lot of risk-off sentiment taking the Japanese yen higher, with the Nikkei trading on Monday's trading session slightly lower. Now, looking at the trading week ahead, we expect more of the same from last week, which means the risk-off sentiment will definitely see higher yielding currencies and commodities and equities moving higher against the US dollar. Now, if we look at the economic calendar, two potential pieces of data could drive risk sentiment: existing home sales due out this evening, as well as new home sales coming out of the US. Now, once again, we expect the trend from last week to continue, which means we're expecting some more upsides in the euro against the US dollar, as well as the British pound against the US dollar. A little later in the week, we have GDP readings from the UK expected to come in at 1.4% year on year and 0.6% quarter on quarter. These are expected to be in line with expectations. And as a result, the British pound should have a good support level at about 1.53 against the US dollar, and we should see more upsides there. With regards to the euro will find consolidation around the range of 1.33. And if we look at gold has entered a slight bullish trend. And if we can see a conclusive break of 1330 per troy ounce, that opens the door to a move towards 1430. But overall, equity markets also will continue to build on those record highs from last week. So once again, it will be all about the risk on sentiment in the week ahead.